Hi friends, good morning. Welcome back. So what's the topic for today?
So topic for today is we discuss about the equity funds in the previous session. Let's discuss further.
All right, super. So in the previous sessions, we covered few variants of equity mutual funds. So what are the few variants that we covered? We looked at large cap funds, correct? We looked at mid cap funds, and we also looked at small cap funds, correct? So which are large cap funds? So if we rank the companies on the Bombay Stock Exchange, so the first 100 companies basis the capitalization are large cap, 101 to 250 are mid caps, and 251 plus are all small caps. So this is one way of looking at capitalization. We also said, in general, large cap companies are companies which have got more than 25,000 crore of capitalization. This has got somewhere around 5 to 25, and this is less than 5,000. Okay, so this is what we have covered in the previous. So this was just a quick recap. Now, let us extend this conversation a little more and start looking at another very popular type of mutual funds is called focused funds. Now, what is a focused fund? Focused fund, as the name suggests, is a fund where the securities which are bought on those funds are in focus right now. Why are they in focus? They are in focus because of their growth opportunity. So the stock prices are doing marvelously well relative to somebody else in the system. Okay. In general, focus fund, since it is focused, so the concentration is pretty high. So they generally are like 20-25 stocks. Okay. In a diversified portfolio, in a large cap diversified portfolio, there could be like 60-70 stocks, but in a focus fund, it is generally around 20-25. So the concentration is like 4 to 5% in each. Okay. Whereas in others, they are approximately around 1 to 1.5. Okay. So this is not a diversified portfolio. It is a concentrated portfolio. They are focused in few specific securities. So it's, in fact, this is very, very popular for the last few years amongst investors, and it is doing very well. Okay. Another very popular fund are called global funds. Okay. Global funds. So as an investor, we are investing in Indian stock market. So our exposure is in Indian stocks. Okay. And our exposure is also on the rupee. Okay. Indian rupee. Now, as an investor, I might think, you know what, I need little more diversification where I want few stocks which are not Indian in nature. So I would like to invest into a global stock. Global stock could be in US dollar, global stock could be in euro, global stock could be in Great Britain pound, whatever. Okay. So I am diversifying my risk away from Indian stock market and moving into the global stock market. So there are a set of investors who want that level of diversification as well. So these set of funds are becoming very popular, and in this, when you are investing in global stocks, apart from how those stocks are performing, the movement of rupee to USD is important, the movement of rupee to euro is important, and movement of rupee vis-a-vis GBP is important, because if you are investing in a global fund, obviously you are also exposed to the currency. So if Indian currency depreciates and USD appreciates, so if this appreciates, it's fantastic. If this appreciates, it's not good, because if you're investing in euro, you want this to appreciate. If you're investing in GBP, you would need this to appreciate, because after you invest and if the rupee starts appreciating, that means it was not a great choice. All right. So right now, if you look up today's newspaper and all that, you would be noticing that rupee is actually depreciating a little. Last few days, it's gone past 84 rupee to a dollar. So it's actually making little more sense to invest into global stuff. Another very popular is FOF, which is called Fund of Funds. Okay. So wherein an investor is looking at a massive level of diversification. Okay, so they invest into a fund, and that fund in turn invests into multiple other funds. Okay, fund 1, fund 2, fund 3, and fund 4. So this is a great way of diversifying immediately into several scripts, because if you are investing in a fund of fund. Okay, all right. Now let us look at another way of looking at equity mutual funds, where as an investor I might think, you know what, like during the COVID times, if you notice, all the pharma companies did well because people were falling sick, we needed the vaccine, we needed the medicines. So I might say, you know what, the time has come that I want to concentrate my bets in one particular sector. Maybe I say pharma, maybe I say banks, maybe I can say FMCG. Okay, I'm extremely, confident about these sectors. So this kind of investments are called sector specific. Sector specific. So where I invest in a fund, and that fund is only investing in the stocks of this particular sector. It could be pharma, banking, FMCG, defense, consumables, and so on and so forth. Super. So these are multiple ways of looking at funds. Two more last variant. One is called multi-cap. Other is called Flexi-Cap. Slightly confusing. Multi-cap and Flexi-Cap. Okay. So these are various categorizations. So if you want to know why these things, categorization as per SEBI. Okay. So there are multiple categories available for a mutual fund house to launch a fund. And this actually helps the investors to be also very sure about what they're getting into. So SEBI has very defined objectives as per each category. So another categorization is multi-cap and flexi-cap. Multi-cap, so there is a small definition like what qualifies to be a multi-cap, but predominantly what it means is that in this particular fund, there is going to be large cap, there is going to be mid cap, and there is going to be small cap. In what proportion? Those proportions can vary. That would depend upon the fund manager to decide what is important. Flexi-cap is a very interesting kind of fund category. You know what? After you invest into a small cap, okay, and if many people are investing into small caps, the stock prices will keep increasing, right? So as the stock prices keeps increasing, their market cap will keep increasing, because stock price multiplied by the number of shares is equal to the capitalization, right? If the stock prices keeps increasing, this capitalization will also increase, right? Because this is constant. If this increases, capitalization increases. So if I am a small cap company today and the stock prices keep going up, eventually I can become a mid cap, because the stock prices have gone up and the capitalization has gone up. Eventually I can also become a large cap. So I can become, it's not equals to, I can eventually become if the stock prices keep going up. And mid cap, if the prices keep falling, can also fall into becoming a small cap. Okay. Flexi cap are those funds where you take bets about these shifting categories. Okay. And if it moves from one category to the other, then the fund manager will sell off that, because they would definitely want an exposure. So they want an exposure into small caps, they want an exposure into mid caps, and they also want an exposure into large caps. If you buy something here and this moves into this category, then, and if you already have enough exposure here, then you won't continue with this for long. You will sell this off and you will buy a new stock here, so that your apportions into small cap, mid cap, and large caps remains intact. Okay. Otherwise, suddenly if every small cap becomes mid cap, so this is going to be a mid cap concentrated portfolio. So you will maintain your exposures across small cap, mid caps, and large caps. So that theory also holds for multi cap kind of funds. Super. Great. I think we have got into far more detailed understanding about the various types of equity mutual funds. Hope this was absolutely useful. We will come back with more videos on categorizations, and maybe tomorrow we'll get into fixed income as a category of mutual funds, and then we will talk about risks in a mutual fund and so on. If you are liking the videos that we are producing, I would invite you to like, share, and subscribe to OAVA Online Academy. All the very best and happy investing.